There we go. That's our notification that we are live. Good afternoon, everyone. It's afternoon where I am in the V&A waterfront in Cape Town in South Africa. Welcome to today's expose of two very exciting community rounds that are open for a very limited period of time to super exciting companies. As usual, I'm joined by my compatriots, Tim, my co-founder, who I believe is in Bryanston today, and Blake, our CIO, who is in Salt Rock in the East Coast. Good afternoon, gentlemen. Welcome to you, first of all. Nice to have you with us again. If we get straight into the business edge of things, Tim, can we just quickly talk about the fact that we want to engage people? So on the left-hand side, we've got a QR code that allows people to scan it. So ladies and gents, hover your smartphone over that QR code on the left. That lets you join a notification newsfeed capability that we've built, whereby we can send notifications of the latest open deals and put you first in line to react via WhatsApp. And then during the course of today, on the right-hand side, if you find investments that you think are exciting, that you want to be a part of, please scan the code on the right-hand side, which will help you into an automated process, and our team will engage you on facilitating your investment. Tim, before you can invest, you need to know the T's and C's. Can I ask you to take us through those, please?
Thanks, Willem, and great to be here today. So yeah, as we move on, you need to be one of the following. You either need to be a sophisticated investor or a high net worth individual to invest with us through our United Kingdom-based structure. So I'm going to go through those requirements, and it's just one of those requirements. If you are a sophisticated investor, you need to self-certify that you meet one of the following. You are a member of a network or syndicate of business angels, and you have been for the last 6 months. You've made an investment in an unlisted company in the past 2 years. You work or have worked just prior to investing in the private equity sector, or you provide finance to small and medium businesses. Finally, you're a director of a company that has an annual turnover of at least £1 million. So if you meet one of those requirements, you would be considered sophisticated. If you're not sophisticated, you'd need to meet the high net worth individual requirement. And to do that, you need to have an annual income to the value of £100,000 or more in the year preceding the date of investment, or you have a net asset value of £250,000 or more at the date of investment, and that net asset value excludes certain things such as your primary residence. So those are the requirements. You need to meet one of those requirements, and they're an or, not an and. So we find that most of our investors do tick one of those boxes.
Fantastic, Tim. Thanks very much. We like to tie down all of the details and make sure that we are compliant, and our process will also help you with the self-certification, ladies and gents. If during the course of today, as we've already said, while people are still logging in, you would like to join our newsfeed capability, we'll just quickly put those QR codes back on screen. The left-hand side one gets you into our newsfeed so that you can be front-footed with new deals that come along, which they do often. And on the right-hand side today, if you do find a deal that you like, to scan that QR code, which allows you to start the investment process. Throughout the conversation, as we're about to engage founders of these two businesses that we're showing you today, you are also able to pose questions. Please use the comments and Q&A box for that. I've got a second screen in front of me, which the team will then feed those questions to me, and we will pose them to the founders, so you have the opportunity to engage them live. Who are those founders? We've got Alon and Gal here today from Tel Aviv, a company named Olay. And then we've got Carlos from Panama with a company named Munily. But before we get there, we thought to just set the scene of where VC is at the moment and some top-down, as we call it internally, from our CIO, Blake Musgrove. Blake, can I hand over to you for the quick market recap, please?
Thanks, Willem. Good to hear seagulls in the background. As a lot of our investors know, at simple.Capital, we run both a top-down and a bottom-up investment process. On a monthly basis, we have a macro top-down meeting, and certainly the last few meetings have been super interesting given everything that's going on. So we've got Europe at war. So obviously the Russian invasion of Ukraine has caused a lot of dominoes to fall this year. It's rattled commodity markets and it's pushed up energy, food, and commodity prices across the board. This, especially commodity prices has led to massive inflation pressures across the globe. We're seeing unprecedented levels of inflation. So almost 7% expected globally in 2022. And that's twice the average of the last decade. We're seeing record levels of inflation in the US, 8.5% in April, the highest in 40 years. Insane inflation in the UK, over 9%, and Eurozone approaching 9%. This high inflation has led to structural increase in interest rates globally. So we're seeing the end of monetary policy as well as quantitative easing. So the end of easy money. And this has been illustrated through further hikes from central banks around the world, such as the Fed, hiking 75 basis points at their last meeting. And due to the insane dollar strength at the moment, the cost of international goods priced in USD costs a lot more in local currencies in other countries. And so what we're seeing globally is central banks increasing the strength of their currencies against the dollar by increasing their interest rates. And what we're seeing is the new normal. Every time a central bank is meeting is a 50 to 100 basis points increase in interest rates. So it really is unprecedented times. These higher interest rates and inflation have led to broad-based growth forecast downgrades. So the US is still marginally positive, but there's an increased probability of recession. China, European Union, emerging market GDP growth outlooks are all being revised downwards this year. And so in these choppy economic conditions, we need to look for businesses that can benefit from a tough macro environment. And just as an example, we're featuring a company called Munily, which has counter-cyclical benefits. So in hard times, with food insecurity and pinched wallets, we see crime rates going up. And this is a tailwind for Munily, which is a security tech business in LATAM. Overall, in the VC markets, we've seen global funding reaching a peak last year in November, about $70 billion. That's come down to below $40 billion in May of this year. So a big retracement. We've also seen the sell-off in listed tech stocks really filter into private markets, typically a 6 to 9 month lag, but we are seeing that contagion. So increased discount rates on future earnings has caused the sell-off, especially in the tech sector. So there will be volatility that persists, but there will be great opportunities to get involved in great businesses at great prices. And so we think at Simple Capital, it's a good strategic time to invest with a longer term view. And there has been in recent years a record amount of capital that's been raised. So there is still competition for strong opportunities and good deal flow within the VC space. So we believe it's a good time to enter. Just to give one last little tidbit in terms of graphical illustration on valuation revision. So if we just bring this up, those of you on last week's call would have seen the same graph, but you can really just see since September, October last year, in terms of peak valuations, you've seen material retracements. So just to pick out one, high growth payments and fintech, up to 30 times forward-looking revenue multiples last year, retracing down to the 10 times area. So if you take a longer term view, there is value to be created. Thanks, Philip.
Thank you, Blake. And just my 2 cents worth, I was with the Actuarial Society of South Africa this morning, where resilience in portfolio was a big topic, specifically given the volatility that you've alluded to now. And certainly the sentiment holds outside of Simple Capital as well, that looking for alternative assets that provide high yield that currently are on discount seems to be at the order of the day. Now, how do you do it if you do want to get involved, ladies and gents? Well, we as Simple Capital ordinarily create the ability to invest with us through 2 vehicles. I'm going to ask Tim, our CEO, to just talk us through what these 2 alternative methodologies are and how they differ from one another.
Thanks, Willem. So if you've invested with us before, you probably know the Simple Capital investment bundle. It generally happens on a quarterly cadence and generally has 3 to 4 investments in it. And we've launched this product because we believed a major part of our value proposition to investors in the VC space was adding some diversification to their portfolios. So to date, we've raised over $1.5 million with 4 successfully closed bundles. However, as we've been on this ride, we've been working with founders to help them raise community rounds. A community round is generally a round reserved for folks who's supporters of that business. So friends, family, customers, suppliers, etc. We have quite a vigorous vetting process. And over time, it's become clear to us that we should make these community rounds available to our community as well. Because in the spirit of increasing diversification for the individual investor, these community rounds could add to their bundles in terms of creating diversification. So we are very excited to present some of the community rounds that we have open at the moment, and there's a few. They're all super high quality, and we're really excited about all these opportunities.
Let's take a look at those opportunities for people in the audience. We've got 2 today, and perhaps just talk us through the highlights of these 2, please.
Great, thanks. So Olay, incorporated in the US, in Delaware, initial traction and sort of base camp for the team was in Israel, in Tel Aviv, but they've now also or are about to launch operations in New York City. So that's really exciting to see expansion into the US market from an Israeli-based tech company. In terms of the numbers, $70,000 in gross merchandise value already. That's growing 35% month on month. They currently have over 30,000 app users. They've signed up 50 stores and have over 400 brands available to consumers on the Olay app. And as I mentioned, they're about to launch in New York City. I think the second company that we have is Munily. So some of our folks at Simple Capital might be familiar with Munily. It was part of our most recent investment bundle. They're also incorporated in Delaware in the US, but based in Panama. They've expanded to two new markets in the last 4 months, so Colombia initially and then Costa Rica. They've already gained 10% market share in Panama. They've grown to 30,000 monthly active users, and they're servicing over 350 residential communities in LATAM. So I think these are both super exciting businesses in terms of what value they have to offer to their markets, as well as exciting investment opportunities for our investors. You can see that these are really strong metrics. We've got the founders online, and they're going to explain exactly how their business works. So yeah, back to you, Willem.
Thanks, Tim. Certainly companies that have got metrics that suggest super high growth, and so that will make investors quite excited. I remind everyone that you don't need to wait until the end. These rounds are limited, and so if you do find an affinity with one of these opportunities, please use that QR code that we had indicated to facilitate your investment. Now, Tim, just what is a community round? How big are they, and what successful ones have we done in the past? Perhaps just to give some comfort around the understanding of what a community round really is. Perfect.
Yeah. So I think, it's different to a bundle in that you only have exposure to one investment. And this diagram basically shows that, generally we land up investing about $200,000 as Simple Capital on a community round, which is made up of some folks who write smaller checks and some folks who write slightly bigger checks. So you can see the different sized bubbles there representing different tickets from our investors. But it really gives investors access to the best deals around the world. And I think what's really important, and where we as Simple Capital differentiate a lot to other players in the market, is we have very curated deal flow. So we're very specific about the opportunities that we take to our investor base, and we spend a lot of time debating internally which are the best ones. And by the time it makes it to this webinar, we really do believe that these are some great opportunities that will be interesting to our investors.
So we've had some in the past as well. Sorry, Tim, I think we've got a bit of lag there. I think you were going to go for where I was going to go, so I'll give back to you.
No problem at all. So exactly. So we've done some successful ones in the past. You can see the big skyscraper there being Flex Club, where we put in just under $350,000, but most of them sort of averaging out at about $200,000. What's also been interesting is that on occasion, when we've done a community round for a business, is that we've seen other investors invest directly in that business as a direct outcome of the community round. So those are the dotted lines. So there are just some successful ones. I'm sure there's some names on there that you would know. But at the moment, we have 5 live opportunities. So 3 of them were covered in last week's webinar, Home, Tulix, and Builder. Those opportunities remain open and remain live. So you can actually invest in those as well if you go through the QR code. And then today, we're going to be covering Ole and Munili.
All right, wonderful. Thank you very much. I'm pretty much excited about the community rounds as well, because what we're talking about is a community of users also actually investing in companies about which they are enthused. As a consequence, you have this flywheel of enthusiasm around support and growth of the enterprise. At this stage, Blake and Tim, I'm going to say goodbye to you for a little while. I'll see you again in a short spell. And in the meantime, welcome Alon and Gal from Tel Aviv, co-founders, in fact, of Ole. And there they are. They're sharing a screen today. Welcome. And welcome. Nice to see you again.
Hi all. Pleasure to meet you. My name is Alon and this is Gal.
Hi.
We are the founders of Ole. I think before we'll jump into Ole, we'll give you a short introduction of ourselves. So
I'm going to hand the reins to you, and then I will see you, because I do know that you've got a pre-scripted message that you want to deliver to the community. So let me get out of your way, and then we'll see you for the Q&A right afterwards.
Great, thank you. So ladies first.
Yeah, so hi, I'm Gal. I'm born and raised in Israel, but I lived a few years in the States. Both my parents were entrepreneurs, so I guess I kind of caught it from home to really build something from scratch. But my real passion is marketing, and that's what I'm in charge here in the company.
Great. I'm Alon. I'm coming from a tech background. I'm coding since I was very young. I'm very passionate about product creation. I was an officer in the Army, served for 5 years, was a leader of a special unit combat team, and then get back to tech. Gal and I have started Ole after we already had another startup together. Gal and I have been working together for 8 years. We are best friends. It was amazing working together on our previous startup. So it was clear to us that we are going to move on to the next one together. We are very passionate about consumer products. And now we're going to tell you all about our new venture, Ole. So maybe I'll share with you our screen. Can you see my screen? Yeah, great. So Ole brings fashion shopping with delivery and returns on demand. The idea of Ole was actually my wife's idea when we were in a weekend in Tel Aviv and we were ordering a burger. And then she tells me, like, how come that I can order a burger just made for me and delivered in 30 minutes, yet when I'm buying from this store, from this fashion store around the corner, it takes 3 days to arrive. And this was a moment when we realized there is a big gap in the experience we are getting in fashion, rather all of the other spaces, like you can get food, farm, groceries, everything is now on demand, and fashion is not. And in fashion, it's not only about getting it fast, because when you are buying fashion online, there is this misconfidence when you're not really sure what you're going to get, whether this size will really fit you, whether you like it or not. And this creates the biggest problem in fashion e-commerce, which is returns and exchanges. And this is why we created Ole, a fashion marketplace with delivery and returns on demand. So the way it works is that you can open Ole's app, see all of the stores around your location. This could be local designers, multi-brand stores, and the big brands. You can then order from these stores. Our courier, a fashion-forward courier, will deliver the package to you within 15 minutes. And then the cool part is that you can try it out, see if you like it or not. And if you do, you can keep it. And if you don't, you can immediately send it back to the driver who is waiting for you, and he will take it back to the shop. And that way, we are bringing the store experience to wherever you are. So you can order multiple sizes, different colors, different items, try them out, and only buy what you really like. We've just launched in Israel a couple of months ago, and we're seeing amazing growth here in the market. And all of this is coming organically from word of mouth and collaboration with the stores that are promoting all this service to their social platforms. The reason for that they are keep on coming back is that we're seeing 40% of them coming back to make repeat purchase. And the reason for that is this try and buy feature. When we were talking to our customers, they were saying how confident they are getting when they don't need to worry that they will get stuck with items they don't really like. And when it comes to on-demand business, it's all about profitability. Now, everybody is talking about that. Blake has just talked about this choppy market and how everybody going from growth phase into profitability mode. And the coolest part about Ola is that we are already profitable and making profits for every order. And the reason for that is because our average order value, unlike other on-demand businesses, is much higher. Our average order value is $200, which is 6 times higher than a typical on-demand business. We are charging 20% commission, so that gives us $40 of revenue for every order. Out of these revenues, we are taking $30 to cover all of our operational costs. This is the cost for the delivery, this is the cost for the packaging. All of the operational costs are covered within this cost, within this $13, and that keeps us with $27 of profit for every order. And all of that made possible because COVID changed the entire market. The way we work is that we are connected to the store and make every store into a local fulfillment center. We are utilizing the live inventory that is now accessible to offer our customers access for the store and being able to order from the store inventory. And that's possible only through COVID, when all of the small stores came online using Shopify, WooCommerce, or any other kind of e-commerce platform. And the other players starting to create products like click and collect, when you can buy online and go and pick it up from the stores. And these capabilities, just from the last couple of years, made all possible. We are already working with 50 stores selling the top brands around the city. This could be the big brands that you all know and love, like Nike, Balenciaga, Nina Bing, and Levi's, and local designers that customers love and wearing unique kind of pieces. And the greatest part that you can see here is that all of the stores that have started working with us, all of them are still working with us. Nobody have churned because we are really generating value since day one. It's a plug and play solution. We connect. The next day, we are already have all of their inventory and starting getting them new orders from their store. The store sees that as an extension of the store. So if by now they were offering their goods to everybody who is physically in the store, they now being able to offer their store content into all of the community around them. And by that, leverage the power of the network of the community to buy from their store. This is a huge market. Fashion is the #1 category in e-commerce. This is the $59 billion is the market in the US, and we are going now to open Ola in New York, and I will tell you all about it. We just finished Y Combinator a couple of months ago, and we raised $1.5 million. We decided to open a portion of our round also to offer it to the community because we really believe the power is within the people. If you have great people with you, you can leverage that into the success of the company. Using this money, we are now focused on getting to the journey of product market fit and launching Ola in New York and then London, reaching $500,000 of monthly GMV. And when talking about profitability, this takes us into a point when we are heavily relying on our own income rather than outside resources like investors. So this really gets us confidence with this choppy time in the markets. This is a summary of the presentation. You can then see it all. All of the things that I've just mentioned are written down here. And thank you so much. I would love to answer all of your questions.
Alon, thank you very much. Certainly super exciting unit economics, super exciting capability, and of course, a lot of consolidation happening in this space. So also potential exit opportunities, albeit on the horizon. There was a question that came in on my screen. What happened to your previous startup that you had together?
Yeah. So Gal and I have worked on Angie, which was our previous startup. We had to shut it down after COVID. We sold some of the goods, some of the asset of the company, But as the market was totally freezing, we shut it down during COVID.
We, in turn, I would just share with the audience, we like second and third time round founders that have had experience of the hardship of entrepreneurship before. And so oftentimes startups that needed to be closed are viewed as a negative thing. We view it as a very positive thing because of the experience gained.
Yeah, definitely. We learned a lot during that time, for the good and for the bad. And I think the most amazing part is that we are here together, getting ready with much more experience for the second phase.
Yeah. For us, it was obvious that we're going to do something new again together. And especially in the consumer space, that is really exciting for both of us.
Fantastic that you're also still got a healthy relationship subsequent to a closing down of a business. That's fantastic to see. Can I ask, talk us through some of the New York expansion? You say you love consumer type goods, obviously millions of consumers in New York. Talk to us about your expansion there.
Yeah, so New York is really exciting. We just landed there a month ago, and we are getting amazing positive feedback from the market. We are meeting with the best brands around town. I can name some of them, like Saks and Tory Burch and Something Navy, and all of these brands are showing significant interest to join Ole and take a part of the revolution of this new shopping experience that we are now introducing. While I was here in Israel, we learned a lot about these experiences and how customers enjoying trying things out, buying when they are having coffee with their friends, ordering to their work. And when going to New York, when these are much bigger brands, that, you know, this is a fashion capital. When you are operating in New York, you have to be big. And these big brands are struggling creating innovation when they need to support such high demand, like you said. So this is why they couldn't create these small acts like we've been seeing to other locations. And in New York, there is a big need. The average delivery time in New York is about 3 to 5 days. This is a lot. You know, in New York, in the US, everybody used to press a button and get it on Amazon, and fashion is not there. So people are really excited about that. And definitely this is the way the future of fashion is going to be like. And New York loves to be in the lead of innovation.
Alon, for our users, perhaps just talk about the customer experience that you are trying to engineer here, but on a practical level. We've heard your presentation, think it's a fantastic business, but if you and I were sitting at a restaurant having a beer, what would the experience be?
Yeah, so if we were...
I think I would describe it as magic, right?
Definitely magic. One of our employees is an ex-Uber and launched Uber and Uber Eats in Europe. And he was saying, like, this was a magic thing that you're pressing a button and you're getting a cab. Now you're pressing a button and you're getting the fashion item, a dress, a t-shirt. So if we were having a beer, and we should do that sometime, and looking at Ole, we were, you could see all the stores around your location. This could be the local designers, some cool designers like Anina Bing. This could be multi-brand stores. This could be the big brands like Balenciaga, Levi's, Nike, and so on. We can then order from these stores, and while still being at this bar, a courier, a fashion forward courier, actually 50% of our couriers are girls who loves fashion, would come to us and deliver the package to us. We'll get this cool box. Maybe you can bring me a box. Yeah. A cool box of Ole. You can then get your package. This is the box. So this is a branded experience. And then you will get it. You can check it out, see the t-shirt, see the bag, see the shoes. You see if you like it. If you do, you will keep it. And if you don't, you will immediately hand over the box back to the courier, which will take it back to the shop. And the entire payment is only made after you decided what you want. So if you didn't take anything, you're not paying for anything. If you took it all, if you took some parts, you will only pay for what you got.
Yeah.
That is amazing. You're making the store come to the consumer.
Exactly.
And we see really creating new shopping experiences. So we see people ordering to the office, to the coffee shop, when they're sitting together with friends. So these are actual new experiences that people are having while shopping for fashion, which were not even possible before.
Yeah, we saw that how these new experiences change other markets like food, when you can order food wherever you are. You're in a park, you are getting access to new type of experiences, and the same thing goes also here for fashion.
Right.
Okay, I've got two more questions for you before I let you go. The first being, is the macro environment, economically speaking, conducive to this type of, I would almost call it leisure shopping methodology, going to hold water? What is your view on that?
So I think this is a great opportunity for Ole, because while we are seeing other on-demand businesses struggling with unit economics, we really changes that. We really see that we are making profits for every order. While we're seeing Uber and DoorDash and Deliveroo, all of these companies are optimizing unit economics, we are in a place that we are very flexible, because our average order value creates us much more significant revenue. And when you're looking into profitability, we're a company that is already making profits. So this is really a great sign. And when we will scale up, these profits will also be able to support the growth of the company and other opportunities to scale up into new markets.
All right, that makes sense. Now, just the last question on new markets. You've trial run this in Tel Aviv, and it's given you sufficient confidence to go into other markets. But cultures are different. Sometimes language is different. Sometimes consumer behavior is different. How do you deal with the transition from where you knew how things work where you live to New York where you don't live, and things might work a little bit differently?
So it's a great question. Ole is an hyper-local marketplace. We're going city by city. And when we're going there physically with operations and everything you just mentioned. So right now, Gal and I are on the line between New York and Israel. And we also have a partner who is physically just transition and moving to New York. So it's really important to have this kind of player that is local, knows the market, and have the access to the market. So this is one thing. And also for when you're looking at the need, this need is not a local need right here in Israel. This is a global need, where sometimes this is an emotional experience that is really crucial for players. It's not a one that you just want this t-shirt. It's a need of returns when you're getting stuck with items that you don't really like. And this need is not only global. This is actually bigger in New York and London, where fashion is more of a cultural and everybody is buying fashion more frequently and online, and they are not having this amazing experience that they can now get everywhere. And I'm sure that we can agree that looking 2-3 years forward, this is the way we will buy fashion.
Right. I think another thing that is important to add is that a lot of the stores that we work with today in Israel have stores in New York as well, which really brings confidence. So if we're selling Bash here in Israel, which is a brand, they have a store in New York. We're already selling big, really known brand names and stores that we can now just do the same deal in New York as well.
Yeah, leveraging our network and our customers to open new markets.
I love the fact that you are tapping into a consumer behavior which is homogeneous across multiple jurisdictions and enabling that through technology. Ole and team, we wish you well for this community round and for the expansion, and you have our full support and excitement behind you. Thank you very much for joining me today.
Thank you so much.
Let me bring back Tim and Blake real quick. Ladies and gents, it's always interesting to hear from our CEO and the CIO why simple.Capital likes a particular community round opportunity. Gentlemen, what's the simple.Capital view, the house view, as it were?
Yeah, so I mean, an amazing business, and I think it's going to fly in the US. And that sort of centers around some of the points that we think are really critical to why we like this opportunity. So if I summarize it in 4 points, it's really around team and the founders specifically, this expansion opportunity into the US, the total size of the fashion marketplace and the opportunity to get involved in that, and then the strong traction that they've already shown. So, in the day-to-day. So, I mean, the team spoke about their backgrounds, and they've launched at companies before. This is not like we're going to be paying for school fees. They've done that. This is their second time on working on a startup. New York and is just an entry point into the US market. There's probably a dozen cities in the US that could benefit from this fairly quickly as soon as they've sort of figured out how to roll out New York in a really slick way. The market opportunity is over $59 billion just in the US. And I mean, to put that into perspective, in Israel, it's just under $2 billion. So this entry into the US is significant. And then we spoke about some of the early traction that they've shown just before, 30,000 app users, revenue growing 35% month on month, having been launched last year, already 50 stores and 400 brands on the platform. 40% of the customers are making repeat purchases, and the average order value is $200, which is 6 times bigger than your, people who are ordering burgers and Cokes.
Yeah, Tim, and I suppose just before we get into the deal structure, such a profound consumer behavior to solve, in that you spend hours browsing for the product that you want, by virtue of the fact you want to make sure that what's delivered is actually what you want. Now, perhaps browsing a little bit more freely, have multiple things delivered to you, pick what you want, send the rest back at a fantastic rate also. So really like a global thing that our investors can look forward to buying into. Speaking of buying into, Blake, what are the deal terms and how does one buy in?
So if you're super excited about the growth trajectory of Olé and the expansion into the US market, which is essentially the equity growth story from here, the instrument at hand is a safe note with an $18 million post-money valuation cap. A reminder that with the safe note instrument, that is the highest valuation that you would ever convert into a priced equity instrument. If a valuation is conducted in a priced equity round that is lower than that, you would convert at the lower amount. This is a seed funding round. The entity is Olé Marketplace Inc., which is a Delaware entity. We have got $200,000 allocated by the Olé team for this community round. And a reminder to investors, the minimum entry points are $1,000. Obviously, investors can invest multiples of that, up to our allocation of $200,000 in this particular deal.
All right, fantastic. Blake, thank you very much. Ladies and gents, if you're excited about Munily to the same extent that we are, use that QR code top left of the slide that you see currently. That takes you into the investment start process. Olé, a company that is now dealing with a global consumer trend, looking specifically to solve that browse to buy shortening of time, obviously a global market that they're trying to attack, and scalable through the use of technology. Hope you're enjoying that as much as Simple Capital enjoys it. Gentlemen, thank you very much. I'm going to switch gears now and get to Munily. And I know that Carlos is dialing in from a very different time zone. I don't know that he's had time for bacon and eggs yet this morning, because my understanding is that it should now be about 6:45 in the morning where Carlos finds himself. And I think we're patching him in right now. There we go. Carlos,
hello.
Nice to see you again, sir.
Yeah, early morning here in Panama, but happy to be here with you.
Wonderful. Nice to see you again. And thank you for getting up so early in the morning. What a start of the day to be able to tell a community of people about your very exciting venture, Munily. Firstly, help our consumers just understand, where in the world are you right now?
Perfect. So I'm in Latin America, in Panama right now. And Munily is already in Panama, Colombia, and Costa Rica. So we're a Latin-based company. So if you're excited for the Latin market, stay tuned.
Carlos, we are staying tuned. I know that you've got some slides prepared, so I'm going to hand over to you. Please tell our base what Munily does, why you're excited about it, and talk a little bit about the traction that you've experienced thus far. We look forward to hearing your story.
Perfect. Do you see my slides now?
They are up and you are live.
Awesome. So Munily is an access control management app for LATAM gated communities or buildings. Since March 2021, we have grown up to 60,000 MRR. We have 24,000 weekly active users, in which are residents that are using our app. Daily active users, we just touched a week from now 10,000 daily residents that are using our app, and that's with over 350 clients in Panama and Colombia. So our biggest milestone is that we already touched 10% of Panama's gated communities on buildings. This is how our city looks like. Panama, if you have not been here, it's like a Latam Miami. It's a skyscraper all the way. So you can see here that we have touched a significant part of the city. Is using our technology. Is using their buildings and mainly to manage their access control. Not only the access control, but even more. I'll show you later. And to talk a little bit about our cohort retention rate and why do we look to that. As I mentioned before, we have touched yesterday, a week from now, that's like our biggest milestone yet. We have touched 10,000 residents using us daily. But what's that? We have 10,000 residents that are using our app to manage their access control or to manage other things within their buildings. And you can look at why residents are loving us and how residents are loving us right now. We have touched 70% cohort weekly retention rate after 7 weeks. So when we go to a building, we install Munily. After 7 weeks, we still have 70% of our building, of our residents using the platform. That's way above our market industry. But what's the problem that we are solving? Since pandemic, the boom of e-commerce, deliveries, and service providers going into the buildings, going into the gated communities, going into residential communities has exponentially grown as crazy. And what do you get there? What do you see? You see the same security guard with the same paper. It's usually they have a paper like in the third picture, in the right. They have a manual paper that with the delivery or the package comes in, he just writes in the paper what the information of the delivery guide is telling. But what's the problem there? You don't know if the information of that delivery guy is telling you. And what do you get? You get a lot of lost package because you don't have real time data of what's happening with that package that enters your community. You have a lot of delivery guys right now in Latam, moreover in Colombia, that are entering these communities to rob their residents, and these communities are not having the data to track who was the guy that came in. Also, you have the problem with the intercom. I don't know if you have been to Latam, but you have this old-fashioned intercom that you need to install it in each and every home. If you need to, if the intercom is broken, that's usually after 2-3 years, you need to pay around $2,000 to fix the intercom. What we do right now is that, hey, with Munily, you can have a virtual intercom, and you don't need to have all these cable only residential community, because right now you can have it in the phone with our app. So still in Latam, huge opportunity. 95% of our residential communities are still using pen and paper for access management. So our solution is simple. We have an application with 3 basic roles that are the administration of the community, the security guard, and the resident. So it's cloud-based. Now you have 40 seconds to access. Before, you have deliveries and packages that are staying in the guard around up to 10 minutes to access the community, and it's 20 times cheaper than the traditional intercom. So when you have a visitor, you receive a notification and you accept or deny the picture and the information that the security guard is sending you. And when you approve it, the security guard receives a notification that the visit may pass. So we are 4 co-founders, myself and Panamanian, Khaled and Marwa, they're brothers, they're from Colombia, and Mitchell is our CTO from Venezuela. So this is my second startup. And what are we more excited of? We are more excited of the future that we see on residential communities, or as we said, gated community, that is any community that have an access control to enter. So that's a building, that's a residential community, or a community of houses that have some kind of point of entry. What we see is that security for us, or access control, more important is our Trojan horse for us to be the portal to sell directly to residents. There's a huge gap of service providers that are trying to get these residents, not only service providers, but third-party platforms that are trying to get the apartments that are there to rent or to sell. So there's a huge need in a platform that connects residents, that connects apartments owners or house owners to the marketplace, in this case, or to service providers or to buyers. If we are right now are hitting 10,000 residents a day, this opens us a huge door to be that portal. To make residents facilitate their payments. We right now are closing an alliance with MasterCard, so the residents can pay their monthly maintenance fee. And next, we are gonna let not residents but rentals pay the rentals through our app. Also, we are trying an MVP in Panama that we are having a gross GMV of around 2,000 a week, and that's with home services. You right now immediately in Panama, you can get in and you can buy fruits and vegetables. You can ask for a car wash to your home. You can ask for laundry to your home. You can ask for a lot of other daily need products or daily need services that you need in your home or in your gated communities as well. So, but what's the market? So we are right now we are B2B. So the apartment, the gated community, the building pays us a monthly fee of $169 on average, and that's adds up into a ticket of 2,000 a year. Our contracts are yearly; they pay us monthly. And in LATAM, as of now, there's 2.2 million LATAM communities. And I say as of now because it's a market that is growing very rapidly. It's people are moving into these gated communities because not only because it's security, but also because tele office. You want to live in a place that you have better common areas. You want to visit in a place that have better security. So it's a trend that's happening in LATAM, biggest cities. And that's bringing us into a $4.4 billion market opportunity. But what's the biggest or the bigger picture? The bigger picture is once we get these residents, once we get these communities, you can see a market opportunity more than tripling to $30 billion. And why is that? Because there are huge needs that these residents are having, or there's huge needs that service providers or companies are having, not being able to access these residents. And this is just to mention three of them. It's payments. Right now you do very manually how you pay the monthly maintenance fee, or in LATAM mainly by checks or money transfers. The payment rentals also it's paying here, and home services. There's not a platform of home services in LATAM that it's working right now. So we are raising 1 million. We want to hit 100,000 MRR by December. We want to touch 15% market share in the cities that we're in Colombia. That it's Bogota and the coast. That it's Barranquilla and Cartagena. And we want to expand into 3 new markets. Okay, thanks.
Fantastic, Carlos. I think so many South Africans will be able to relate to gated community living, access control, which is third world, prehistoric pen and paper, and the ability to move into digital and the comfort and convenience that brings. And of course, super exciting that Google has already started to buy up companies that have produced the hardware for some of this gated community type living. So I think you are in a very, very exciting space with a lot of options and optionality. Tell me about the expansion though. You've proven the concept in Panama. You have a large percentage of the market there. And my understanding is that you've now also gone into Colombia and Costa Rica. How's that going?
Yeah. So we got into Colombia, Costa Rica. We have some clients. We don't have our operations there still, but we're planning to have it by the end of the year. In Colombia, we already have around 150 clients in three cities. That's Bogota, Barranquilla, and Cartagena. And our biggest city as of now, it's Barranquilla. Barranquilla, it's fairly simple to Panama, similar to Panama. You have high skyscrapers and big gated communities. So we have touched on a big pain that they were having. So yeah, we are growing a very very good pace in Colombia. Also, we have brought into the picture some new products just to the Colombian market that we have getting a lot of good traction on them. And yeah, that's a little bit on how we're doing in Colombia as of now. Now two of our co-founders are living in Bogota, so I'm still in Panama. I'll stay here managing our Panamanian operations. But and they're from Colombia, so it was a natural expansion for us. There are two Colombian guys that they crushed it in an international market. They went back to their country, and they wanna crush it in their country. So it's a beautiful story, and people and residents are liking a lot what we are bringing into Colombia. So yeah, we are very excited on how the year it's gonna end in the Colombian market.
Superb. Carlos, the question has just come through of where you are trying to expand to. So we were a little bit ahead and we answered that question actually already. Closer to home, you've remained in Panama. How is the core market of Panama going for you?
Yeah, so since in this year we has added 2 percentile points. We started the year with 8% market share. Now we're in 2% market share, and that's a little bit over 200 residential communities. And Panama for us, it's a market. It's going to be a trial market. We are gonna be able to try new things. As of now, we're trying the home services. We have a GMV of home service of $2,000 a week that our people residents are buying from our local service providers marketplace. So we are trying new things in Panama to see how residents are reacting to them, and then to bring it on into Colombia. So Panama for us is a great market. It's a market that pays us very good. In Panama, our MRR it's 50K. So the rest in Colombia. So mostly our MRR is from Panamanian communities. And yeah, we're also gonna try by the end of the year. We're gonna try our fintech model in Panama. With Mastercard, we're closing a huge alliance with them, and they're going to be able to pay their maintenance fee via the app. So to put you into perspective, the monthly maintenance fee on average is around $120, and on average in Panama, every community has 100 units. So there's a huge MRR that these buildings or these communities are receiving. You have communities that are receiving every month $120,000 just in monthly maintenance fee. So there's there's millions of dollars in transactions that we're gonna be able to process by the hand of Mastercard once we have this functionality.
Carlos, that is unbelievable. I'm going to bring back Tim and Blake while you take a drink of water. We are super excited about the fact that you are not a first-time founder. You're obviously talking to a market which globally has application through gated communities and security concerns. And so we wish you all of the very best for your expansion plans and the growth of your business and the adding of extra value to consumers as you're going along in servicing their basic need. We think it's fantastic, and we are super excited about you and about Munili.
Thanks, guys.
Thanks so much. As per usual, let's get the house view. You've heard from the founder himself, ladies and gents. Let's hear about the Simple Capital house view.
Thanks, Willem. And I think that there's a really nice synergy between the two businesses that have been presented today. When you're sitting at home using Olay to order your fashion, you need Munili to access the gate. So really, really interesting synergy there. I think that our sort of 4 points that we really like about this, expansion into 2 new jurisdictions that was spoken about a lot on the call. That gives us greater LATAM exposure. We're very bullish on Latin America as a market, huge growing population, and services like this are well needed. I think the market opportunity is significant. Carlos went through that in a lot of detail, but there's this significant opportunity that they're tapping into, and you can already see that they've managed to acquire a significant stake in their launch city of Panama. Great initial traction. So as we noted earlier on, the team is showing really strong results, 22% month-on-month growth. They're already generating over $500,000 of annual recurring revenue. It's used by over 364 communities, and they have 30,000 monthly active users, 8,000 of those using it daily, which is really interesting to see an app that's used that often. Most apps sit on people's phone and they maybe use them once a month, maybe once every couple of months, but to actually be used by 8,000 people daily shows that there's strong traction. And I think that speaks to the final point of 70% retention. Because this is so necessary and so intertwined into your day-to-day living, people do not drop off. They continue to use the app for a long period of time. So yeah, those are some of the facts or the points that we really like. We've included this in our bundle. And we continue to support this as a great investment opportunity.
Yeah. And of course, as he's expanding his territories, his value will grow. And so the opportunity for both a very handsome return for investors if all this goes right, together with servicing a real global need. Super, super exciting. Ladies and gents, if you are excited as we are, top left, as per usual, scan, click, start the investment process. Blake, what is the deal and how does it look?
So Willem, this is also a safe note, $25 million post-money valuation cap. Also an entity domiciled in Delaware. This is Munili Inc. This is also a seed round, and we also have $200,000 allocation. So a lot of similarities in the deal constructs and a lot of similarities in the businesses that have been incubated in their core markets, but are now expanding globally.
Wonderful. Blake, thank you very much. So safe jurisdictions for where the companies sit, global expansion capability, not first-time founders. This is not their first rodeo, and have already proven in core markets now trying to expand. What an exciting story to be a part of. Tim, if we do go down the route, we'll quickly flash the QR code for all of this excitement to find a channel through which to participate. But if people do participate, we've got a simple capital structure that, true to our name, makes it simple for you to invest. Just a quick recap of how that works so that when investors start that process by scanning the QR code, they know what's coming at them. Tim, there we go.
As a community round investor, you will be investing through Simple Capital Limited. That is the long gray structure in the middle, which is an investment holding company. And that entity only issues preference shares to that have exposure to either bundles or community rounds. And each preference share asset is ring-fenced from other preference shares. So that's very important. As Simple Capital Partners Limited, the ops company, we sit separately. So we sit away from that entity, and there's a juristic division between us and the holding company. And then you have your other bundle investors. It's a UK-based vehicle. You can invest from $1,000 per share. You have, and there's a 5% upfront fee with no annual fees. So in a traditional fund structure, you're generally paying 2 and 20, so 2% annually, and then a 20% carried interest. We don't have any annual fees. You just pay 5% upfront. So by year 3, you're kind of making profit. And then we have a performance fee on a deal-by-deal basis that is less than the traditional 20%. And there's various ways that you can actually make your investment. So you can do a bank transfer or a wire transfer. You can use a credit card, or you can use Apple Pay or Google Pay, depending on your preference.
Right. So if you were going to go for an Olay investment, you would get a type Q pref share. If you went for Munity, you'd get U. If you went for both, you'd have a Q and a U. And of course, there's a full showcase for the month of July, because these were the two that we exposed today, but there also have been other July activity. And on the next slide, we'll just quickly talk about what they are as a recap. There we go, gentlemen.
Yeah, so 5 super exciting businesses. Interesting to see they are all incorporated in Delaware. So nice juristic safety there for all investors. Operations across Africa, the Middle East, the US, and Latin America. The 2 that we covered today, Olay based in the US and Israel, Munity based in LATAM, and the 3 that we covered last week, Builder, which is based in the US and Canada, Home Energy, US and South Africa, and Tulix, which is based in Kenya.
Superb. Tim and Blake, thank you very much for joining us on this lunch hour July expose of community rounds. Always a pleasure to be online with you. Ladies and gents, there is the QR code that if you hover over, gives you access to not first-time founders, proper jurisdictions, proven product market fits, expansion stories, something really exciting to be a part of. That code gets you into the start of the process, from where you are able to select the investments that you find favorable and join the journey. We thank you for joining us today. Lunchtime is over. Please do reach out to us on our WhatsApp line if you have any further questions, comments, concerns, or want to delve a little bit deeper into some of these opportunities. And until next time, we remain dedicated to yours in prosperity. Have a good afternoon. Thank you very much.